Welcome to the Daily Insights That Matter. The third quarter results for early bird companies indicate a slowdown in the corporate earnings and the revenue growth. Now, the combined net profit of 225 early bird companies across sectors was up 2.5% year on year in the third quarter of the current fiscal. Now, this is the slowest growth reported in the last 10 quarters. Their combined net sales in quarter 3 were up 18.2%, which is the slowest revenue growth reported in the last 7 quarters. Now, while the growth was led by the BFSI sector, the performance of non-BFSI companies remained relatively muted. Their combined net profit was down 8.5% year on year in the third quarter. Now, the BFSI, that is the banking, financial services and insurance industry, particularly the banks, had led the profit growths once again on the back of improved credit growth, higher interest rates and stable asset quality. Now, in case of non-BFSI companies, one of the most significant obstacles is the constant rise in the interest expense. For the first time in 9 quarters, interest expense for non-BFSI companies grew faster than their net sales growth. Now, the rising mismatch between operational profit growth and the interest expense has resulted in a persistent decline in the company's interest coverage ratio, which measures their capacity to service debt. Overall, the boom in the financial sector profits has negated the impact of rising commodity and interest costs on the early bird companies' earnings. Now, the fintech sector is one of the key sectors in the Indian startup ecosystem and has consistently been one of the top funded sectors. Now, fintech sector, the most sought out and the favorite market for investors, has been hit by the slowdown and the funding has almost halved in 2022. The funding in fintech sector startups declined by 47% to $5.7 billion in 2022. Now, the total number of funding rounds also declined by 29% to 390 funding rounds in 2022. Now, the drop was on account of the decline in late-stage deals from $8.5 billion in 2021 to $3.7 billion in 2022. Additionally, only 4 startups received the unicorn status in 2022 compared to 13 in 2021. India currently has 1,492 funded fintech startups with a total funding of approximately $33.2 billion. Now, India is currently going through a funding winter on the back of rising inflation and macroeconomic concerns, which, by the way, is affecting the nations across the globe. Now, despite the decline in financing, India still ranked 3rd in the world for fintech funding, only after US and the UK. So far, 188 acquisitions have taken place in the fintech sector and 36 companies have launched their IPOs as well. Now, after enterprise software as a service, which has garnered $16.5 billion in funding over the past 2 years, the fintech industry in India is the second most funded industry. So what does all of this news mean for you? On one hand, rising interest rates benefited the banking industry, whereas high borrowing costs and rising interest expenses impacted the non-BFSI companies' profitability. Hence, the Q3 early bird results were a mixed bag. Therefore, this will have an indirect neutral impact on you. The global macroeconomic factors are leading to the ongoing funding winter, and this is expected to bounce back once the inflation cools off. Having said that, the growth in the fintech industry in the long term is expected to be strongly propelled by a large unbanked population and the rise in the mobile phone usage. Therefore, the slowdown in the fintech funding will have an indirect neutral impact on you for time being. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.